What's going on, guys, and welcome back to another video. So as I'm sure you're aware, the stock market has been underperforming over the last few days. So in today's video I want to look over two main topics. Firstly, how my overall 30 stock blue chip portfolio is currently doing, and second of all, my plan of action to counteract this. Just before we jump into my Trading212 portfolio, can I please ask, as always, if you're new around here, to consider subscribing to the channel, as we're trying to get to 900 subscribers by the end of this weekend. And with all that being said, let's dive right into today's video. Firstly, obviously the markets didn't completely tank, but we can see on screen here that such indexes as the S&P 500 has had their longest losing streak in over 2 months. You can also see across the internet that a lot of people are warning of another stock market crash, just like last March. But again, you kind of have to realize what happened then as well. Although the markets did tank in March, it did pose a lot of brilliant buying opportunities, which a lot of people did snap up. So you have to realize that even if the market does crash, that's not a bad thing either. As a long-term investor, that always is going to happen, as markets are cyclical, so they need to move up as well as down. So in my opinion, this poses great opportunities as a long-term investor. So as we'll see later on, my overall 30 company blue chip diversified portfolio is down about 1.5% this week, which again isn't a whole lot if I'm being honest. However, a lot of things can happen over the next few weeks, and a lot of people are expecting that there's going to be more of a crash, that the stock market could go down another 4 to 5% at least. So you need to kind of be aware of that, and my overall goal, or my overall plan should I say, is to have cash reserves at the ready to take advantage to dollar cost average. So at the moment my overall portfolio is worth about €6,950. We're up about 11% overall, or just under €700. We can see here we had highs this week of up about 12.6%, or €7,052. That's about 1.5% drop. So if we look at that in conversion terms, €6,950 is currently about $8,400 and about 6,000 GBP. As I'm sure you're aware, one of the main premise of my overall investing strategy is to take advantage of dollar cost averaging, and besides having diversification, why I have 30 companies is to always have opportunities to dollar cost average. For example, if I held just say Walt Disney, we'd find it very hard, as I'm up about 50% overall at the moment in that company, I'd find it very hard to find opportunities to dollar cost average to bring down my overall average cost. So that's one of the main reasons why I have 30 companies spread across all different sectors, as I feel this will always give me opportunities to take advantage of dollar cost average. We'll now just have a very brief look through my overall portfolio to see how each sector is doing and how each company within that sector is doing. Again, we'll just do it very briefly, and then we'll go through my plan of action next week in terms of what stocks I'm buying. So first of all, communication services is up 19.6%, and we see my two holdings, Walt Disney and Facebook, are both in the green. Again, I won't say the percentages on these companies as you can see them on screen, so I'm only going to focus on the overall pie itself. In consumer discretionary, we have 3 companies and we're up 1.5% overall here. Again, you can see the companies yourself on the right. Consumer staples is down 0.6%. In the energy sector, we're up 21.65%. ETFs, we're up just under 15%. In financials, we're up 21.5%, and I have 5 companies here on the right. Healthcare is up 8.2%. In my industrials, we're up 5.5%. We have no holdings in the materials at the moment. In real estate, we have the one company up 2.8%. Tech, my largest holdings, we're up 16.5%, and all 5 companies are on the right here. And utilities, we currently have no holdings. One of the main reasons why I just briefly went through those sectors or companies is because I haven't bought any companies over the last week or two, and the whole reason for that is because I wanted to see the overall market segment and see if it was going to go on an up or downward trajectory. And in a way, I was kind of hoping it did go down, because that again poses opportunities to take advantage, which will give me longer, better profits over the long term. So what I've done over the last few weeks was build up a cash reserve. So what we're going to do now is look through the companies that are currently in the red, and we're going to talk about what companies I'm going to buy at the middle of next week to help improve dollar cost averaging, which again will make my overall portfolio profit even better. What we'll do now again is briefly look through my overall portfolio to see what companies are actually in the red, and we're going to put these on the Excel here for next week so we'll know what companies I'm buying. Now it's important to note as well what percentage you're putting into each of these. For example, if you had €1,000 to invest, and let's say one of the companies was McDonald's and you had €5 invested, let's say, and the other was Apple and you had €1,000 invested, well obviously you want to put a lot more into Apple instead of McDonald's if both are in the red, as you'll have a better overall effect if you put more into a company that you have more capital in. First company on my list is McDonald's, and that's currently down about 0.2%. However, on a normal situation, I always would put a lot more money into any companies like McDonald's or Coca-Cola when they're in the red. However, because it's only down 0.2% and there's a lot more companies within this portfolio that are in the red, I believe my capital is better served than elsewhere, so we're going to leave McDonald's for now. In consumer staples, we have two here that we're definitely going to take advantage of, and they are PepsiCo, which is down 3.3%, and P&G is down nearly 5%. So both of these companies are getting added to the list. Next company, or ETF should I say, is iShares Global Clean Energy, which is down 5.5%. A lot of people have been asking in the comment section if they should sell this ETF, and in my opinion, no, because again, it just serves as a better opportunity to dollar cost average. And if you look at actually the longer charts, even the 1 year chart for this ETF is still way above what it was this time last year. So maybe over the last week or two or even month, it is down in value. However, you need to look at the bigger picture, and if you're a long-term investor, this just poses a great opportunity to buy more. So I'm definitely adding this to the list as well. In ETFs, we're both well up here, so we're not going to touch those at the moment. In financials, we can see here all five are in the green. We're not going to touch those either. In the healthcare sector, Pfizer is definitely going to be on the list. It's 6.3% down, so I'll add that as well. Industrials, waste management is down 1.5%. So I'm kind of on the fence about this. Usually I don't really invest further into companies unless they're down more than 3%. So I might just put this on the sideline and see if it does drop more at the start of next week. In real estate, realty income is up, so we're going to leave that. And finally, the tech is 4 of the 5 are currently in the green, with IBM being the exception. It's only down 0.5%. So just like waste management, I think I'm going to leave this one as well. On screen now is a blank Excel that I compiled all the data that we just discussed. And the 4 main companies that we're going to focus on this week going forward is Pepsi, P&G, Global Clean Energy ETF, and Pfizer, as they're down the most overall. And we can see here that the other 3 companies that I have on the sideline and we're going to have a kind of as a watch list is McDonald's, IBM, and waste management. On the left here, we can see in column C4 that I'm going to be putting €500 next week into my account, which will bring us up to about €7,500 at the moment. So that'll be 7.5% towards my overall goal of €100,000 invested. I'm not going to put all this money in at once. I'm going to drip feed it in. So next week we're going to actually allocate it out right now. After thinking about it there, I'm going to start off with €200 of that 500, which is 40%, and we're going to put €50 into each of these top 4 companies here next week. So then the following week we can kind of come back and see where we stand with those companies. If they went back up in value, then well and good. We made a better dollar cost average, effectively giving us a better, cheaper price. But if they went down further in value, that's not a problem either, because we have other money, another €300 on the sideline to pump further in, that even if it went down further in value, we're actually getting an even better dollar cost average. So that's why it's very important to always have a cash reserve and not just to lump all the money you have available into a stock, because if it goes down further in value, you won't have any available resources to help further dollar cost average, which kind of puts you at a disadvantage as well. Definitely one of my main kind of tips for a long-term investing in terms of dollar cost averaging is patience. Like, you'll be surprised how much more money you can actually make if you don't just dive into companies, as you need to have a long-term approach. And you need to, again, what I like about long-term investing is that it keeps emotions out of it, so it doesn't really matter if the stock goes up or down on any given day, really. All I care about is if the stock actually goes down in value, that I have available cash to dollar cost average. That's pretty much it for today, guys. I just wanted to give a brief overview of the current market conditions. We had a look through my overall 30 company blue chip Trading212 portfolio, and we had a look at how each of my sectors were performing and how each of the companies within these sectors were doing also. We also had a look through my plan of action next week to counteract the drop in the market over the last few days, and we discussed the companies that I'm going to further dollar cost averaging next week to take advantage of this. If you found this video anyway helpful or interesting, it'd be much appreciated as always if you're new around here to consider subscribing to the channel, and it's always much appreciated if you would like the video as well. If you have any questions, comments, queries or suggestions, please don't hesitate to comment below and I'll be sure to get back to you as quick as I can. Thanks very much, guys, enjoy your weekend, and I will see y'all in tomorrow's video.